Hey, what's up investors? Welcome back to Alpha ETF, the channel where we review the best and the worst exchange-traded funds on the market. I'm your host, and today we're going to take a look at one of the most popular ETFs out there, the iShares Nasdaq 100 UCITS ETF, AC. This ETF tracks the performance of the Nasdaq 100 index, which includes the 100 largest non-financial companies listed on the Nasdaq stock market. You know, companies like Apple, Microsoft, Amazon, Tesla, and many more. Sounds pretty awesome, right? But is this ETF really worth your money? Let's find out. Before we dive into the details, make sure you hit the like button and subscribe to our channel for more ETF reviews. And don't forget to leave a comment below and let us know what you think of this ETF or any other ETF you want us to review. Alright, let's get started. As always, we're going to rate this ETF based on 5 criteria: total expense ratio, fund volume, volatility, sector/country/theme exposure, and performance. For each criterion, we'll give a score from 0 to 10, where 10 is the best and 0 is the worst. Then we'll add up all the scores and divide by 5 to get the final rating for this ETF. Ready? Let's go. The first criterion we're going to look at is the total expense ratio or expense ratio. This is basically how much it costs you to invest in this ETF every year. The lower the expense ratio, the better for you as an investor. The expense ratio of this ETF is 0.33%, which means that for every 100 euros you invest in this ETF, you pay 33 cents in fees every year. That's not bad at all, considering that this ETF gives you access to some of the most innovative and profitable companies in the world. In fact, this expense ratio is lower than the average TER of other ETFs that invest in as technology stocks. So we're going to give this ETF a score of 8 out of 10 for expense ratio. The next criterion we're going to look at is the fund volume. This is basically how big this ETF is in terms of assets under management. The bigger the fund volume, the better for you as an investor. Why? Because a bigger fund volume means more liquidity, more stability, and lower transaction costs. The fund volume of this ETF is over 7 billion euros, which makes it one of the largest ETFs in Europe. That's very impressive and shows that this ETF is very popular and trusted by many investors. So we're going to give this ETF a score of 9 out of 10 for fund volume. The third criterion we're going to look at is volatility. This is basically how much this ETF fluctuates in value over time. The higher the volatility, the riskier this ETF is for you as an investor. Why? Because a higher volatility means more uncertainty, more stress, and more potential losses. The volatility of this ETF is quite high, as you would expect from an ETF that invests in technology stocks. These stocks tend to be very sensitive to market trends, news events, and consumer preferences. They can go up or down very quickly and dramatically. For example, in the past year, this ETF has gone from a high of over 850 euros to a low of under 600 euros per share. That's a huge swing. So if you invest in this ETF, you have to be prepared for some roller coaster rides and sleepless nights. So we're going to give this ETF a score of 4 out of 10 for volatility. The fourth criterion we're going to look at is sector/country/theme exposure. This is basically how diversified this ETF is in terms of industries, regions, and topics. The more diversified this ETF is, the better for you as an investor. Why? Because a more diversified ETF means less exposure to specific risks, less dependence on specific factors, and more opportunities for growth. The sector/country/theme exposure of this ETF is not very diversified at all. This ETF invests almost exclusively in technology stocks. That means that this ETF is very exposed to the risks and opportunities of one country and one sector only. If something bad happens to the US economy or the technology industry, this ETF will suffer a lot. If something good happens to other countries or sectors, this ETF will miss out on a lot. On the other hand, this ETF also gives you access to some of the most dominant and innovative companies in the world. These companies have huge market shares, loyal customers, and strong competitive advantages. They also benefit from the trends of digitalization, e-commerce, cloud computing, and artificial intelligence. These are the companies that shape the future and create value for society. So we're going to give this ETF a score of 7 out of 10 for sector/country/theme exposure. The fifth and final criterion we're going to look at is performance. This is basically how well this ETF has done in terms of returns over time. The higher the performance, the better for you as an investor. Why? Because a higher performance means more money in your pocket, more satisfaction with your investment, and more confidence in your strategy. The performance of this ETF is very impressive, as you would expect from an ETF that invests in technology stocks. These stocks have been the best performers in the market for the past decade, thanks to their strong growth and profitability. This ETF has more than doubled its value in the past 5 years, and has outperformed the global stock market by a wide margin. Of course, past performance is not a guarantee of future results, and this ETF may face some challenges and competition in the future. But for now, we're going to give this ETF a score of 10 out of 10 for performance. Alright, it's time to add up all the scores and get the final rating for this ETF. We gave this ETF an 8 for expense ratio, a 9 for fund volume, a 4 for volatility, a 7 for sector/country/theme exposure, and a 10 for performance. That gives us a total score of 38 out of 50. Then we divide it by 5 to get the average score of 7.6 out of 10. That's a pretty good score, don't you think? It means that this ETF is a high-quality product that offers you access to some of the most successful companies in the world at a reasonable cost. Of course, this ETF is not perfect and has some drawbacks, such as high volatility and low diversification. But if you're looking for an ETF that gives you exposure to the US technology sector and its growth potential, this ETF may be a good option for you. Well, that's it for today's review of the iShares Nasdaq 100 UCITS ETF, AC. I hope you enjoyed it and learned something new. If you did, please hit that like button and share this video with your friends. And don't forget to subscribe to our channel for more ETF reviews. Also, let us know what you think of this ETF or any other ETF you want us to review in the comments below. We love hearing from you and we'll try to answer your questions as soon as possible. Thanks for watching Alpha ETF and see you next time. Bye.